What's going on, everybody? Thank you so much for checking in. In this video, we're going to talk about SPY, which is the S&P 500 ETF, and we're also going to cover some other notable names on the market, such as Apple, NVDA, Tesla, Amazon, AMD, and Meta. So let's go ahead and get started by first talking about SPY, and we're going to do so on the daily candles, where we can see that SPY is closing in on its 52-week highs. However, there are some key events that are happening this week that may help further up this trend, or they may send us back down. So let's go ahead and talk about these events before we jump into our charts and talk about the levels for these stocks. The first event being the PCE report, which is the inflation index that the Federal Reserve prefers. So we did see the CPI report that came out a couple weeks ago. It showed that inflation is still on track of cooling down, but the PCE report is what the Fed use to determine where inflation is right now, and it also helps them determine if they need to raise interest rates higher or keep them as is. So the Federal Reserve is expected to meet in just a couple weeks and decide on interest rates. And so if this PCE report comes higher than the trend that we've seen around 3.4%, then it may force their hand and it may force them to raise interest rates again. We are not expecting them to raise interest rates again this year. However, if there are any surprises, that may impact their decision and that may send markets back down. So that is the biggest event that we are watching this week, and we'll talk about some levels to both the upside and the downside that you can watch after this report comes out. The next most important event that's happening is going to be the final revision of Q3 GDP. The US GDP has been very impressive. You can see that since Q3 of last year, we have been at positive territory. So everybody is worried about a recession, but in reality, we have not seen a recession in 2023. We did have a slight recession in 2022 when we had two back-to-back negative GDP quarters, which is the definition of a recession. But in 2023, the markets and our economy have proven to be positive. So far, we are not expecting a recession to hit at all this year, especially with the fact that the Q3 GDP of 2023 came in at a fantastic 4.9%. Last but not least, before we jump into our charts, is the Consumer Confidence Index, which is also expected this year, and it will give us the November reading. Consumer confidence has been trending up since July, but it has pulled back in the last couple months, and so far it's reading just fine. However, just keep an eye on that because that may impact the markets, especially trading where we are right now. Considering the fact that we are closing in on those 52-week highs, any surprises may scare the buyers and may send markets back down, but so far it's looking like buyers are fully in control. So now let's jump into our charts, starting with SPY, and we're going to actually zoom out and we're going to talk about SPY on the weekly candles, where we can see that last week we closed the week with very, very low trading volume. Now that is expected because it is a holiday week, but one thing we have to note is that we are trading just below this rejection, which was right around 460. So this 460 rejection that happened in July of 2023 sent us back down for the months to follow all the way until October, which means that this mark right here, this point, is going to be the most significant resistance for us to break above in order for us to rally any higher. For that reason, our resistance on our chart is not 460, it is 462, because we don't just want to see it break above 460. We want buyers to come in and bring it all the way above 460 confidently. Therefore, we placed our resistance at 462 above the 456.40 mark. So 456.40 is the first resistance in focus, which was last week's highs before we got rejected. And so far, we are trading in bullish territory, and we will remain in strong bullish territory as long as we're above 451.90. But we really want to see that 460 breakout so buyers can prove themselves above this point and they can continue pushing us towards that all-time high level of around 480. But before 480, we do have some price targets, which would be right around 465. We will be updating these price targets in the videos to come, so make sure you're following back up. Now to the downside, if the market decides to turn back down, the first support and focus is going to be 451.90. It is very obvious to why that is a support. You can clearly see that there was a battle right around 451.90 right here. When we broke above it, we came back to retest it and we bounced right at that point, which means that became a support point, and buyers want to see the market, or SPY in this case, hold above that level in order to avoid turning back down. If we do break below 451.90, the next available support that is worthy of noting is going to be right around 447.70. And if we break below that point, that's when we would consider taking on a short or a put position down towards the 440 mark. The reason why our downside price target is so aggressive here is because when we zoom in, you can see that below that 447.70 mark, there's really not much support. This was a very vertical move. It wasn't one of those moves that stepped its way up or created a ladder-like movement. This was a straight vertical move. So it's going to be just as easy to fill it back down in the case that we break below the 4470 support. So our downside price target below this level is going to be right around 440 to 442. But as we mentioned earlier, we are leaning bullish on the market. So even if this move does happen, we will be watching for a reversal to move back up. If you know anything about our trading style, we take our moving averages very seriously. And as long as the stock is trading above its 10, 20, and 50-day moving averages, we are usually more bullish on that stock than we are bearish. Sometimes a stock needs to pull back and retest the moving average before it continues higher. So we wouldn't be too surprised if we saw SPY force a move towards that 10-day moving average, which is this blue line, before continuing its push higher. But so far, overall, we are positive. I know many people are starting to look at the RSI and they're saying we're moving into overbought territory. Some may argue that that is correct, but others may argue that the RSI actually stands for the Relative Strength Index, so it measures strength. And so if you see a stock trading at an RSI above 70, don't be afraid and don't say that this stock is overbought, because it's actually showing that it's very strong. It is measuring the relative strength. So right now we're actually liking what we're seeing from the RSI for SPY at this level. Now the next stock on our watch list is going to be Apple. Apple moved above its key 190 resistance last week. However, it did get rejected back down. Let's talk about some of those levels for Apple. So one thing about the 190 resistance, and this is something that we have brought up multiple times already, is the 190 resistance is where Apple got rejected very strongly back in September of 2023. This was the rejection here, and it sent Apple all the way back down. And so Apple has tried its breakout above 190 a few times already and has not been successful. You can see it tried here, failed, it tried here, and failed. And so this is an indication that 190 is still a very strong resistance. And since it failed above 190 and made it all the way to 192.90 or so, we have created a new resistance at 192.93. And this time around, if it does break out above this level, we are expecting Apple to continue its rally towards 200. The fact that it's tried its hand about 3 times already and failed means that the next time will likely succeed. But for that to happen, we will need an overall market push that will help Apple maintain its momentum and maintain its strength. So 192.93 has become our new resistance. We are bullish on Apple as long as it holds the 186.30 mark. If it breaks below that level, it may see a further pullback, but we wouldn't turn really bearish on it until it breaks below 181.50. If it breaks below that level, then we would consider a short or a put position towards 178, and below 178, the downside price target is going to be right around 173 to 174. The next stock on our watch list is going to be NVDA. Now, NVDA reported earnings last week, came in far above expectations. However, you can see that the stock pulled back and it didn't have any type of earnings move. The reason why is because it is a play from the market makers to play or crush option traders in this case. So option traders who did not give their contracts enough time are crushed, and therefore NVIDIA will likely continue moving sideways to shake out all those option traders before it can continue pushing higher. We are still bullish on NVIDIA. We are expecting it to push higher. But as we said, market makers, they understand that retail traders are trading short-term options. Therefore, when you're trading short-term options, you are running into the risk of being crushed or having your premium crushed. This is exactly what's happening to NVIDIA here. Let's talk about some of its levels, and let's talk about the time frame that we expect it to push back up. First of all, NVIDIA is still strongly bullish. Don't let this pullback fool you. Even though it's below the 10-day moving average, we are expecting it to recover back up. The first downside support we have for it is going to be right around 472.80. Now, if it breaks below 465, we will turn a little bearish on the stock, and we may consider a short or a put position. But overall, we are bullish on the stock. We would love to see it back above 495 this week. And If it can break above 509.17, that is an all-time high breakout, and we will expect the stock to continue through its blue sky breakout. Now, the timeline that we are expecting NVIDIA to come around is likely no less than a month, so we are expecting a late December move or an early January move for the stock to continue its rally. The next stock on our watch list is going to be Tesla, which has been quiet lately. Tesla has not made any significant moves up or any significant moves down, despite the fact that the market is trading near its 52-week highs. Now, here are some levels to focus on for Tesla. But before we jump into these levels, let's talk about Tesla on the daily chart and talk about this 50-day moving average that Tesla has struggled at so much. So Wall Street and institutional traders, they use the 50-day moving average, which is this yellow line on my chart, to determine if a stock is in a bullish or a bearish trend. If a stock is trading above that level, then they consider the stock more bullish. If it is below that level, then they consider the stock more bearish. And here's an example of where SPY proved that fate. So you can see that as soon as SPY moved back above the 50-day moving average, you can see that it retested it and then continued its rally and has been rallying since. So this is the exact move that Wall Street and institutional buyers want to see from Tesla. They want to see it above that 50-day moving average, but instead of moving back down below it on the retest, they want to see it hold. And so going into this week or the rest of these weeks, the first thing you should look at every day is where did that daily candle open in relation to that 50-day moving average? And also, where did it close? If it opened the day below it and it closed above it by end of day, there's a good chance that it will continue rallying, especially the fact that it already failed once. The next time will likely not fail. And here are some levels to focus on for Tesla. There's a big range right now for Tesla. It's about a $25 range. The support is around 226 and the resistance is around 250. The resistance we needed to break above is exactly at 249.30. Above that level, we do expect Tesla to continue its rally towards 257 to 258, and the next price target above that is going to be around 268 to 269. We are holding a position on Tesla. It is a shares position, but we will be getting into calls on Tesla. If you are interested in joining us for those calls, make sure you check out the link in the description so you can get in on our group, especially for our Cyber Monday sale. Now to the downside, if it breaks below 226.30, we will be picking up some puts and we will play it down towards 211 to 212. The next stock on our watch list is going to be Amazon. Amazon trading near its 52-week highs. In fact, it did create a new 52-week high last week very impressively, and it's holding above its 10-day moving average. You can see that the sellers or the bears tried to move it below that 10-day moving average, which is this blue line. However, buyers were strong enough to recover it very quickly, and now it's back towards that 52-week highs. Here are some levels to focus on for Amazon. First of all, the first resistance is going to be 148.10. If it breaks above that level, our upside price target is going to be right around 151 to 152. We are bullish on Amazon as long as it holds the 138.90. If it breaks below that level, we still wouldn't turn bearish. We would only turn bearish if it moves below 134.17. And the reason why is because that is its breakout support. You can see that Amazon got rejected here and moved back down. And the next time it broke above it, this automatically should turn into a support. So anytime a resistance is broken above, that resistance should automatically turn into a support. And so if Amazon comes back down here and it fails to hold that level, then the buyers that bought it up are not going to be happy. They're going to get a little uncomfortable and start letting go of that position. This is a very aggressive downside price target, so we do not expect it to hit it this week. Make sure you check back into our next video so we can update you on these levels. The next stock on our watch list is going to be AMD. AMD has been a fantastic mover lately. They have been moving on the upside since their earnings, and we do expect them to continue their rally. In fact, we are holding a position on AMD that we just closed 50%. We got her in right around 100 and closed 50% of our position right around 125. And we are expecting AMD to continue pushing higher. Here are some levels to focus on. First resistance in the way is going to be 125.35. If AMD can break above that level, our next price target is going to be right around 128 to 129. Again, if you are interested in joining us for any of these plays, make sure you check out our Cyber Monday sale and get in on our group. To the downside, AMD has supports right around 119.45 and another right around 116, but we wouldn't turn bearish and we wouldn't consider playing puts on the stock unless it moves below 112. Below that level, our downside price target is going to be right around 107. Now, Even though we are talking about puts here in this case, swinging puts in this market is extremely dangerous because generally speaking, the market is in very much bullish territory. So if you are swinging puts, make sure that you're positioning properly because markets are more likely going to continue going up than they are to fall back down. The last and final stock on our watch list is going to be Meta, which is also hitting its 52-week highs. Meta has been very impressive. We talked about this bullish flag that it was forming on the weekly a couple weeks ago, and you can see that it has broken above it and it is trying to rally towards this triple top right here. So there was a triple top right around 352.50, which is exactly where we have our resistance for Meta. So above 353.50, my apologies. So above 342.92, which is its most recent 52-week highs, the resistance for Meta is going to be right around 353.50, which is also going to be our bullish price target. To the downside, Meta has supports around 335.60, but we wouldn't turn bearish on the stock unless it moves back below 325.60, and that is because this was the breakout right here, and we'd wanted to see hold that support just as it did here on the retests in order for it to avoid selling back down. But anyways, you guys, I hope you found this video helpful. Don't forget to subscribe and like.